Joining us today is Evercore ISI Senior Managing Director David Palmer. Give us a gut check here, David, on restaurants, fast casual, and whether or not you're buying this notion that the consumer is beginning to fold in some areas.
Well, the under 50,000 income cohort is definitely soft. That's a third of the restaurant consumers out there, and that group has been bowing out of consumption, particularly in the fast food segment, which was not obvious at the beginning of the year that we'd see that weakness, particularly within fast food. A lot of the big brands out there have a value image problem. You're going to see some responses here in July from McDonald's and the like. Within casual dining, it's actually held up pretty well out there with some share gainers that have shown the value, gaining a tremendous amount of share, and a little bit at the expense of Darden that's playing its everyday low price game, but they're losing share to other low priced options like Texas Roadhouse and also Chili's, which is coming in hot with more promoted value on TV.
And then we get comments today from the likes of Kroger, who we're going to talk to them in the 11 a.m. hour, but they did say that even some of the lower cohorts are beginning to show a little more positive momentum. I guess nothing's linear in this case, right?
Now, it's a funky situation that we have. The low-income consumer is weak, but there's also this legacy coming out of COVID where people are having some behavior shifts. One of the things we're seeing right now is that fast casual is gaining share from that low-income consumer cohort. You're seeing people literally trading up from traditional fast food to what they see as a better value at a little bit of a premium. So Chipotle, for example, is gaining a tremendous amount of share, outperforming McDonald's, for example, by over 10 points in comp. So there are some very interesting sort of sub-segment themes going on within the choices that people are making. For example, it looks like people learned how to cook during COVID, and we're seeing Rao's sauce is up 25% in supermarkets, while Olive Garden is not gaining the share you'd think they would gain. So people are doing a little bit more trading to home in some instances in certain income cohorts.
Are the value menus going to help, David, the likes of McDonald's and even the promotional, the $5 promotion that Starbucks is offering?
Yeah, $5 is an important emotional price point. It may help that image of the $12 combo meal that we've heard stories about and social media picks up. And to some degree, what people are reflecting on there is the outrage of the prices of restaurants outpacing wage growth over COVID of 20%. So restaurants are closer to 30%. So they're really reacting to something that's real, that they can't afford it as much. So restaurants are trying to make a reaction to that. It could help a bit. Value menu wars would be good for their image. But it's not like McDonald's itself is bringing a gun to a knife fight. They're just joining the party at $5. Everybody else is there already. So we'll have to see. We're very curious to see how July works out for fast food.